All right, welcome to another explainer. So right now, the crypto market is locked in this incredible high-stakes tug of war. We had a really nice rally, but it's kind of stalled out. And now you've got the bulls, who are all fired up about the idea of cheaper money, clashing head-on with the bears, who are pointing at these massive regulatory storm clouds gathering. So today, we're going to break down this epic battle for control. So, what kicked all this off? Well, it was this huge wave of relief that just washed over the global markets. The news dropped that Iran was reopening the Strait of Hormuz, and poof, a lot of that geopolitical tension just cooled right down. And of course, when that happens, risk assets, and yeah, that definitely includes crypto, they just took off. And wow, was that a strong move? I mean, Bitcoin just blasted past several key resistance levels. We saw prices touching well above $78,000. A lot of people on the street are calling this the Hormuz relief rally, and that's exactly what it was. A huge move higher, driven purely by that shift in sentiment. Okay, but here's the thing. That initial excitement, that relief rally, it's starting to fade a little bit. And this is where the real battle begins. Right below the surface, you have this fierce tug of war going on between some really powerful and totally opposing forces in the market. So let's start with one side of that rope. We've got the bulls, right? And they're looking at some seriously powerful, fundamental, and macroeconomic forces that they believe could do more than just support the current price. They think it could send it a lot higher. And this right here paints a very bullish macro picture. You've got a huge bank, UBS, coming out and forecasting that the U.S. Federal Reserve might cut interest rates by a pretty significant 50 basis points. You know, you're even hearing Fed officials kind of downplay the recent inflation risks. And for crypto, oh man, that is a huge deal. So why does this matter so much? Well, it creates what everyone calls cheaper money. Think about it. When it's less expensive to borrow, all that capital starts looking for a home. It flows away from safer, boring assets and goes hunting for higher potential returns. And that usually means stocks and, you guessed it, crypto. Historically, an environment like this is basically rocket fuel for Bitcoin. But you know, it's not just about the cheap money. It's also getting way easier for the big guys, the institutions, to get in on the action. We're now seeing regulated banks like the Singapore Gulf Bank offering services where their clients can mint stablecoins directly from their bank accounts 24/7. That just removes a massive piece of friction for getting that big money onto the blockchain. Okay, but pulling hard in the opposite direction, you've got the bears. And they're pointing to some really formidable pressures that they say could absolutely stop this rally dead in its tracks and send the market tumbling right back down. The first major storm cloud? It's forming right over Binance, the world's biggest crypto exchange. Yeah, we're talking about renewed regulatory heat. It's a risk that no trader can afford to ignore, especially because it's coming straight from the U.S. Senate. So here's the deal. Senator Richard Blumenthal is now formally probing the Department of Justice about the whole situation with the monitors who are supposed to be overseeing Binance. His big concern centers on what he's calling dangerously lax anti-money laundering controls. And he's citing a pretty staggering number, nearly $1.7 billion in alleged illicit funds linked to Iran. All right, the other major risk hanging over the market is the potential for a flood of new supply hitting the open market. And it's coming from a source you probably wouldn't expect, the German government. Now look, the market barely even blinked when the U.S. recently moved around $600,000 worth of seized Bitcoin. It was a drop in the bucket. But there's a pending court case over in Germany that could put an additional 57,000 Bitcoin under state control. And history tells us that when governments get their hands on a huge stash of crypto like that, it doesn't just sit in a digital vault forever. Eventually, it gets sold, and that creates this massive supply overhang that really spooks investors. But let's zoom out for a second, because this whole tug of war isn't just about the day-to-day price swings. The actual rules of the game for crypto are being rewritten as we speak, and that has some massive long-term implications. So over in the United States, the SEC has quietly laid out a new long-term roadmap. What they're doing is giving self-custody crypto apps, the wallets that are absolutely crucial for the whole world of DeFi or decentralized finance, a 5-year grace period to get licensed as traditional brokers. And honestly, this is a massive deal. Sure, it's a tough path to compliance, but for the first time, it provides clarity. It reduces that constant fear of sudden shutdowns, and that builds tremendous long-term confidence for everyone in the space. Meanwhile, a totally different kind of structural change is brewing over in Europe. I mean, just look at the stablecoin market. It's almost entirely dominated by the US dollar, like 99%. And now you've got France's finance minister, Roland Lescure, publicly calling for a big surge in euro-pegged stablecoins to challenge that dominance. It's a huge signal of a push towards a more multipolar crypto world. So where does all this leave us? What's the bottom line? Well, we're at a perfect impasse. The market is just stuck in this state of high-tension balance. You have incredibly compelling reasons to be bullish and equally compelling reasons to be bearish, all at the exact same time. And this really summarizes that core conflict, that tug of war we've been talking about. On one side, pulling the price up, you have these powerful tailwinds, cheaper money from the Fed, and brand new on-ramps for institutional players. But pulling it right back down on the other side, you've got the heavy weight of serious regulatory scrutiny and that massive potential supply risk from Germany. This whole situation is just setting the stage for a major battle, right? You've got the macro bulls squaring off against the regulatory and supply side bears. And believe me, both sides have a death grip on that rope. So it really leaves us with one final provocative question. In a market that's this perfectly balanced, this tightly wound, which side is going to lose its footing first?